So, one of the things I've always wondered when it comes to cars is how people are affording these newer $50,000 plus vehicles. I'm talking about trucks and SUVs where, unless you're putting up a massive down payment, you're probably going to be paying in excess of $1,000 a month once you include insurance and everything. I've always wondered, how people manage that. But what I find even more puzzling is how families are affording these kinds of vehicles because I'm seeing a lot of them driving brand new SUVs and pickup trucks. And a lot of these families might have mortgages, credit card payments, childcare costs, student loans, and other bills. So I just never could wrap my head around how it's feasible for the average family today to get into these type of cars. Hey guys, welcome back to the channel. Appreciate you guys tuning in and listening as always. So today I wanted to talk about the effect that current state of car prices has on the average family and their finances. Most families today are trying to get into SUVs or pickup trucks for the space these kind of cars provide, but also for the peace of mind it gives them. Just being in those larger cars is much safer in the event of an accident or bad weather, at least according to the statistics. So a lot of young families with good intentions are getting into these overpriced cars and paying massive premium monthly payments. What bothers me about all of this, though, is what it means for the economy. Think about it. The average family today is already having a hard time buying a house. If they do manage to buy one, they'll struggle with the mortgage because housing prices are through the roof, at least in North America. And wages aren't keeping up with the rise in the cost of living. And now, with cars, it feels like they're becoming the second piece of property they own because they're essentially paying mortgage-sized payments just to have a car. Even if they try to shop around, trying to find an SUV or full-size pickup at an affordable price is nearly impossible these days, even if people look into the used market, which, at least in theory, used to provide better value. But now, if you're a family trying to get into a car, especially an SUV, you're not going to find a better deal in the used market either. All you're just going to find is high interest rates, low quality on overpriced scrap, and limited warranties on these high-priced used vehicles. Because of this, a lot of families feel forced into shopping for newer cars instead. But when they go into the new market, they get hit with a massive sticker shock because these new car prices are out of control. I mean, we're talking about an average price of $50, $60, even $70,000 depending on what kind of car they're trying to get into. On top of that, you'll have to deal with quality issues because of all the electronics and plastic parts they're padding these newer cars with. So low reliability and recalls are becoming the norm. And families are essentially paying these sky-high payments for 6 or 7 years on cars that won't even last that long to begin with. And it really makes me think, what kind of society are we headed towards where everything is becoming out of reach? And it's not just out of reach in a sense that you can't afford it, because in that case, you just move on without it, right? It's pretty simple. Maybe there'd be an alternative market where people could still participate, even if they couldn't afford the higher end options. But the problem is with things like houses, college, and cars, I'm noticing that even though these things are far out of the price range that most people can realistically afford, banks still allow people loans to still buy them. And then people stretch their budgets to make the monthly payments, and that's how they get into massive debt and become house poor or car poor. But what does this mean? If you think about it, the average family today, let's say in a mid-sized city, might be looking at a $1,500 mortgage if they're lucky. Then if they want a decent family car, that's at least $1,000 a month once you include insurance. And on top of that, they might be paying off student loans, maybe $500 between them and their spouse. Once again, that's probably if they're lucky. So right there, you have $3,000 a month just paying off debts. It's no wonder that people today are feeling overwhelmed. This is why birth rates are plummeting. And, I ask myself, how did we as a society get to this point? And how did the auto industry get to this point? It's as if auto companies looked at what consumers were willing to sign off on for student loans and houses and thought, you know what, we could do that with cars too. We can get people into massive amounts of debts just to get into a new car and then have them roll over a bunch of negative equity in 5 years once the warranty is over, and just continue on with that until they can no longer afford to continue the cycle. But we're just shooting ourselves in the foot. I don't see this being a viable, strategy in the long run. Not unless we want to absolutely cripple, future generations with debt. Basically, with this trajectory in the future, if anyone wants to have a family, they better be in the top 10% of society. It's insane, but that's what it's looking like. And the car market is one of the major problems leading into this. I don't know. Let me know what you guys think about this. I mean, I know you can try to avoid it by, maybe not going to college, living in cheaper areas, making different lifestyle choices. I understand all of that. But how many people can realistically pull off all three of those things just to keep their finances manageable? I just don't know if this is feasible. And honestly, I don't like the direction we're heading. But let me know what you guys think about this in the comment section below. And as always, if you enjoyed this, make sure to click like and subscribe. Thanks for listening.